Hello everybody, good morning. Welcome to this day's class. I hope I am audible to you. Okay, yeah. So this is a part of the current affairs series that is going on. Okay, I am taking the government schemes one by one. Yesterday I had completed one of the ministries, Ministry of Information, Electronics Information and Technology. MATI is completed yesterday. Today we are going to look at Ministry of Finance, and every day we will cover one by one all the ministries, and together whatever is left or whatever is missed among all these will be covered in the last session together. Okay, so yeah, today again I want to start by telling you my every day I have classes at 11 a.m. That will be for 1 hour regarding all these things. Then you have one at 4 p.m. which is a quiz. Okay, current affairs 25 MCQ quiz, and 6 p.m. at Unacademy app. Okay, these two are 11 a.m. and 4 p.m. are at YouTube only. 6 p.m. quiz is on history is on Unacademy app. Okay, MCQs again 25 MCQs. So yeah, without further ado, let me begin this day's class. Let me tell you something about Unacademy before we begin. Okay, so Unacademy is India's largest learning platform. Okay, because and Unacademy provides you with the following things: daily live classes where you can chat with your educator, engage in discussions, ask your doubts, all those things. Then we have the live tests and quizzes like the ones we have every day at 4 p.m. and 6 p.m. Okay, where you will be able to gain more confidence by solving more questions, and it will prepare you better for the examination scenario. Then you have the structured courses where the entire syllabus for a particular exam will be covered. Okay, if you are preparing for UPSC, entire syllabus for UPSC all the way from prelims to interview will be given to you. Similarly, for each exam, it will be comprehensively covered. Okay, and you have the unlimited access to all the resources provided by Unacademy, all the videos, materials, everything. Okay, and to get all these, simply download Unacademy Learning app from Google Play or App Store. After downloading this, you can start learning. You can sign in a free account and then look at the videos and all which are available to you for free. Afterwards, you can go for a subscription which will enable you to get the complete package. Okay. So about me, I am Madhav Sankar R Warrier, and I have been conducting some sessions for the past 5 years. At most of them were on-site sessions. So I'm new to online teaching as well. Okay, and I have been a former banker, and this is my Telegram channel. Okay, this is actually owned by Unacademy only. I am just posting the updates and all those things in this Telegram channel. So please do subscribe if you wish to stay tuned. Okay, then this is the Unacademy link where I have already completed about 11 lessons there. Okay, so do take a look. All of them are free. And yeah, very familiar faces all around. All these great educators, top educators in India are teaching in Unacademy, and they will be there to guide you and answer your queries. Okay, so make the most of it. How do you do that? Just download the app and click the get subscription button, and you take a subscription where you will get all these things. Okay, this is the syllabus of comprehensive syllabus coverage for UPSC. Okay, the whole thing: polity, history, optional courses, answer writing, everything is there as a package given to you. And these are the subscription rates starting from a month all the way to 2 years. Okay, the 1 year subscription rate is 44,000, which you can get again a discount of 10%. Okay, although it is 44,000, you can get it at 39,600 if you use my code MSRW1. Okay, and similarly for 2 years, 64,000 is the actual fee, and again you can avail a 10% discount using code MSRW1. But along with this, we have one other new kind of subscription which is known as Iconic. Okay, Unacademy Iconic. What is the benefit of taking this one? This will give you an additional personal coach who will be a guide or a mentor to you throughout your exam preparation time. Okay, so he or she will be there to answer your queries, to give you feedback, okay, to channelize you throughout your preparation time. Then you will have daily mains answer writing practice, study planner, personalized feedback. So all these things extra you will get if you go for an Iconic subscription. And these are the rates for Iconic. So if you are writing the exam in 2021, take this one. 2022 or later, go for the second package. Okay, again, discount is applicable here as well using my code MSRW1. Clear? So that is how you get an Unacademy subscription. So this is a peep into my Unacademy channel, unacademy.com/@MSRW. Okay, and you can watch all these videos for free there. So please guys go there and take a look at it. Okay. So that's it about Unacademy and its subscription. If you have any doubts or queries, you can ask me and I will be telling you the answer, giving you the answer. Okay. So we are going ahead with the part 2 of government schemes, Ministry of Finance. Okay. We will be covering about 15 schemes today. Every day 1 hour session, 15 schemes. That's how we are going. And 15 schemes doesn't comprehensively cover Ministry of Finance. So whatever scheme is left will all be put together in a final session at the end. Okay. So that every government scheme will be covered by the time of your UPSC preliminary examination, which is about 40 days from now. All right. So first one, Pradhan Mantri Suraksha Bima Yojana, PMSBY. Okay, I have been a banker before, so I have given this scheme. I mean, I have distributed this scheme to many customers. They come to the bank and they will ask for PMSBY or some Jan Dhan Yojana accounts or the other such insurance schemes. Okay, so what is Pradhan Mantri Suraksha Bima Yojana? Okay, whatever you see the background is the official website of that particular scheme. Okay, you can take a look at that as well. So again, all these are by Ministry of Finance. Okay, I won't be repeating it again and again during this session because today everything that we are covering is regarding Ministry of Finance only. So PMSBY is actually a 1-year personal accident insurance scheme. Okay, Bima Yojana. So it is obviously an insurance scheme and it is a coverage for 1 year on accident. Okay, and you have to renew this every year, and this will offer you protection against death, partial disability or complete disability. Okay, any kind of accidents that may happen, and that you will get coverage for your life, which is death cover, and you have the general insurance kind of thing, which is accident cover. All these are available by PMSBY. Available to citizens including NRIs. This is where you have to be careful. This is how UPSC will ask questions. So make sure you remember it is including NRIs in the age group of 18 to 70 years having a bank account. So in order to get this, all you have to do is go to a bank. If you already have an account, it is great. Otherwise, take a bank account. Tell them you want to subscribe for PMSBY. There is a form. Fill it out, and the banker will give you an acknowledgement slip. That's it. Every year, rupees 12 will be deducted from your bank account, and you will be subscribed or renewed for the PMSBY subscription. Premium is only 12 rupees per year per member. Okay, remember the advertisement of this scheme was shown by Amitabh Bachchan. 1 rupee per 1 month. Remember that ad? If you Amitabh Bachchan taking that 1 rupee and asking what can we do with 1 rupee, and this is what we can do. 1 rupee per month, so 12 rupees for an year. That is the only premium for PMSBY, and you can renew this every year by paying a premium of 12 rupees. If you go to a bank, they can actually switch on the automatic renewal button, which means 12 rupees will be taken from your bank account every year, and you will get enrolled each time into PMSBY. This is a 1-year coverage, okay, and every year you have to renew this. 2 lakhs for accidental death. So what is the coverage amount? 2 lakhs for accidental death and permanent and total disability. 1 lakh for partial disability. Okay. Permanent total disability means, for example, completely paralyzed. That is permanent total disability. And death. In these two scenarios, this insurance coverage is up to 2 lakh rupees. As far as permanent partial disability is concerned, very careful. Permanent partial disability. For example, you lose an eye and your eyesight is gone for ever. Okay, that is permanent partial disability. For that, 1 lakh rupees. But if you say break a bone or something like that, that is not permanent. That is temporary. After 1 month, it will be fine, right? So that those kinds of things are not covered, or they do not get coverage under PMSBY. Individuals who exit the scheme at any point may rejoin the scheme in the future by paying annual premium. I told you, any person between the age of 18 and 70 can avail this scheme. So if somebody opts out of the scheme, they can actually rejoin the scheme at some point if they want and continue it. Okay. The scheme is offered and administered through public sector general insurance companies and other general insurance companies. So again, this is an accidental insurance scheme predominantly. So it is given to general insurance companies and not the LIC. Don't confuse this. LIC is Life Insurance Corporation. So those kinds of things are given to LIC. Accident insurance and all come under general insurance. So it is offered to public general insurance company. Understood? So these are the points that you have to keep in mind regarding PMSBY. Remember the year, the coverage, then what are the amounts for different kinds of disabilities, what is the premium, is it available to NRIs, the age group to which it is available. Okay, so that's it. If you can remember all this, you can answer any questions regarding PMSBY. Hello, welcome. Hi Ashish. Okay. Then you have Pradhan Mantri Jeevan Jyoti Bima Yojana. This is again another insurance scheme. I mean, I have given this out to customers when they came asking for this one. Pradhan Mantri Jeevan Jyoti Bima Yojana, PMJJBY. Okay, so what is Pradhan Mantri Jeevan Jyoti Bima Yojana? This is again an insurance policy, except this is a life insurance policy. 1 year life insurance scheme. Earlier we saw accidental insurance, health insurance. This is life insurance. Okay. Also renewable from year to year. Offering coverage for death due to any reason. Doesn't matter what the cause is. He or she will get upon death. He or she will get the benefits of PMJJBY. Okay. Any kinds of death is covered in accident or calamity or whatever it is. Okay. Available to citizens and NRIs in the age group of 18 to 50. Careful here. This is how you have to think. Earlier, the scheme was the PMSBY was given to 18 to 70 years. Okay, because anybody can get into an accident and he or she might need the insurance coverage. But this is Jeevan Jyoti Bima Yojana, where the coverage is only up to 50 years. Why not 70? Because it's purely logical. The life expectancy of people is somewhere in the 60s or early 70s. So we cannot extend the scheme to that long. I mean, it will be impractical. So it is limited to 50 years only. Okay. Subject to annual renewal, benefits are available till the age of 55. Okay, only up to that period. Because after that, the chances of dying of natural causes is very, very high. So it is very impractical to extend the policy beyond that age limit. Okay. Coverage of rupees 2 lakhs in case of death due to any reason. Again, the amount is same actually, 2 lakhs in case of death due to whatever reason it is. Annual premium is 330 rupees. Every year you go to the bank, you ask the bank to deduct 330 rupees from your savings account, and you will get an acknowledgement slip saying that you have enrolled into PMJJBY. Okay. Other one was rupees 12 per year. This is 330 rupees. More costly, but still very, very great scheme. Anybody can actually enroll for that. So if you haven't taken this, go take this. Very cheap and very useful. PMJJBY is applicable only after the first 45 days of enrollment. This is a crucial point you have to note, because whenever you go for an insurance policy, not just PMJJBY or anything, when you go there are certain criteria that an insurance company will tell you. One of them that we see in many schemes is, after the policy kicks in, there is a lapse period, there is a dead period before which the insurance do not apply. So that period is 45 days for PMJJBY. So which means in between the enrollment date and the first 45 days, if something happens to the person, then this insurance policy is not applicable to that person. Okay, so it is T plus 46, T being the date of your policy enrollment, and 46 days from the 46th day only the claim can be made. Understood? Administered through the LIC and other Indian private life insurance companies. This is why I specifically said this one, PMSBY is by general insurance companies. PMJJBY is through LIC because it is a life insurance policy, and the biggest public sector life insurance company is LIC. And this is also given to other private life insurance companies as well. You can enroll for this through that. Okay, for enrolling, you can just go to a bank or a post office and do fill the form and all that. Okay, no need to go to LIC or any other insurance company. This is administered and managed by them, but enrollment is done through all banks, scheduled banks, and post office and all these things. So that is about PMJJBY. So very important, two schemes. Study well. Okay. Pradhan Mantri Jan Dhan Yojana. Pradhan Mantri Jan Dhan Yojana. I think the some part of this is not visible due to my video there, but don't worry. Pradhan Mantri Jan Dhan Yojana. Here you can see it on top, right? That's enough. So what is Jan Dhan Yojana? Everything is there. Jan means people, Dhan means wealth. So this is something regarding financial inclusion. Okay, financial inclusion of people. So this is a comprehensive financial inclusion of all households in the country by providing universal access to banking facilities. So earlier, before some time, there was a plan by government that at least one bank account, the inclusion was given to villages only, at village level. Okay, the target was to make sure every village has this much access to financial institutions. But now it has been expanded through Pradhan Mantri Jan Dhan Yojana to make sure every household, not every village, every household has access to banking facilities, universal access to banking facilities. That is Pradhan Mantri Jan Dhan Yojana, financial inclusion. That is the keyword here. Okay, at least one basic bank account to every household, financial literacy, access to credit, insurance, remittance, and pension facility. So every household should have at least one bank account, preferably given to women. Okay, preferably, it need not be women, anybody can take that, but preferably this is given to women only. Account can be opened at any bank branch or business correspondent. Bank branch means anywhere, doesn't matter what bank it is. Can be a private bank, commercial, scheduled bank, nationalized bank, RRBs, anywhere you want, go to a bank and you can ask for a Pradhan Mantri Jan Dhan Yojana account. It is a free of cost account, zero balance. Okay, and or you can approach a bank mitra. Who is a bank mitra? Bank mitras are business correspondents, which means there are certain rural areas in the country where you cannot actually set up a viable branch there, right? Setting up a branch actually costs a lot, and customer service in banks are very costly actually. Okay, as far as the bank is concerned, so they may not be able to set up a viable or a profitable branch in very remote locations. So, but we have to cover these locations as well. In order to do that, the bank will send a business correspondent who is named as bank mitra. This person can go there. It is more like a sales executive kind of thing. No, they go to door, or they set up a mini office there and people can come there. Okay, that is what is a bank mitra. So you can approach him in order to open a Jan Dhan account as well. It focuses on coverage of rural as well as urban areas. Okay, Jan Dhan Yojana is universal bank access to every household. So rural, urban, everything is covered. Any individual above the age of 10, very crucial, don't mistake this. Okay, not 18. We will think that we have to be 18 years of age in order to operate a bank account. Yes, as an adult, if you want to operate an account all by your own, then yes, you have to be 18 years old. But you can open a Jan Dhan Yojana account at the age of 10 itself, from 10 years old. Okay, although you will need a guardian. Probably your mother or father will have to be the guardian. 10 years and can open a basic savings bank deposit account. You might have heard of this term, BSBDA account. What is this BSBDA account? BSBDA accounts are those accounts which have zero balance. Zero balance. Right? Right now you people have bank accounts, right? And they say the minimum balance should be 1000 rupees or say 3000 rupees or 5000 rupees. If the minimum average balance goes below this point, then there will be some deduction from your, you will be penalized. Some around 200 rupees will be deducted yearly, right? Also there is an account maintenance charge which will be deducted regularly at the end of every financial year. Nothing is applicable to BSBDA. BSBDA is actually a zero balance account. No maintenance fees is required. Okay, be a very basic account. But there are many limitations to this account. So, for example, the total transaction per month cannot exceed 10,000 rupees. These kinds of limitations are there. Okay, no minimum balance is required. I told you. Life cover of 30,000 payable on death of the beneficiary. So this comes with an insurance. It is financial inclusion. So when you take an account, you will get some benefits as well, and this is one of the benefits. A 30,000 rupees life cover is given to the beneficiary. Beneficiary is the owner of this account. Okay. Beneficiaries of government schemes will get direct benefit transfer to this account. Remember this JAM Trinity, Janthan, Aadhaar, Mobile. This is the JAM Trinity. Okay, so direct Janthan Yojana is all about direct benefits transfer. If you, for example, your LPG subsidy, the scheme Ujjwala scheme is generally given to the woman of the house, the senior most women of the house, and the LPG subsidy is provided through direct credit to that person's account. Similarly, this also works. Any beneficiary of any government scheme in India will get that benefit through Janthan Yojana or direct benefit transfer. Okay. Overdraft facility up to 10,000 is available only one account per household, preferably lady of the household, after satisfactory operation of about 6 months. So what is OD? Overdraft. You may have gone to banks and there are many kinds of loan facilities, credit facilities. We can take a loan, we can take an OD, we can take an LC, and there are many other things. Okay, OD means overdraft, means upon keeping a good financial record or transaction record, you can actually take some kind of loan. OD is a kind of loan which is very limited. Okay, it's probably based on your banking activities and all. So up to 10,000 rupees can be availed as overdraft through Janthan account, except it will be given to only one account of one house. So if there are 3 members in a house and all of them has BSBDA accounts, only one of them can avail this OD. Okay, and usually women is preferred while giving this kind of ODs. Expanded coverage from every household to every adult. This is the next step. This has been a huge success. Okay, some of Narendra Modi's flagship programs like the Swachh Bharat Abhiyan and this one Janthan Yojana, all this has been huge success. Many lakhs of accounts has been opened as a part of Janthan Yojana. So now the government is trying to expand the coverage. Instead of every household, we are going for every individual, every adult. Okay, earlier it was every village. Now financial inclusion is given to every household. Now we are planning to give to every adult. Okay, so every adult, which means every person who is above 18 years of age should have a bank account in India. That is the target now. However, Janthan account can be taken by people of 10 years and above age. Okay, that's it. So this is all about Janthan account. Make sure you learn the important points. Keyword is financial inclusion. Okay, all households, rural and urban, from 10 years and above. Then no minimum balance is required in BSBDA accounts. 30,000 life cover, direct benefits transfers. Okay, 10,000 rupees overdraft. Understood? Any doubts? I hope I am clear. Just study this and you will get through. Look at this. You can see a snapshot of the website here. 40.35 crore beneficiaries banked. So this many new accounts has been added since the start of Jan Dhan Yojana. So it is a really successful scheme. India has a population about what, 100 and something 130 crore scheme. Okay, somewhere around that. So already there are some accounts existing, plus this many accounts has been added as a Jan Dhan account. That is great, right? 1.26 lakh bank mitras has been employed to deliver services to rural and remote areas. Okay, so these are very, very appealing yojanas by by our government. Okay, now we are going to look at what Swachh Bharat Kosh is. So Swachh Bharat Kosh, what is it? Swachh means clean. Okay, so Clean India Fund, something like that. Okay, that is Swachh Bharat Kosh. Just remember this image at the back and you will have a better idea. Swachh Bharat Kosh. Attract corporate social responsibility funds from corporate sector and contributions from individuals and philanthropists to achieve the objective of Clean India by the year of 2019. That was the target. Okay, this is the objective or the mandate of this particular mission. Swachh Bharat Kosh. So what is CSR? Corporate social responsibility. Corporates are earning huge profit by conducting business in the Indian society, right? So the government has decided they can make all the profit they want, but they should also have some responsibility to the society. They are answerable to the society as well. So they can set up their industrial plants anywhere they want, but they have to spend a certain percentage of their annual profit in order for social development activities. That is corporate social responsibility. Okay, at the beginning it was 2% of their average profit of last 3 years. Okay, last 3 years average profit, from that 2% have to be spent on socially relevant causes. That was the CSR criteria at the beginning. Now there are some modifications. You can look at that. For example, even contributing to certain funds like the PMNRF or the PRADHAN PMKS, some of them has been said brought into the purview of CSR, which means you don't have to actually do anything. You can contribute this fund to the government, central government fund, and that is also considered as a CSR. Okay, not everything, only certain. There are certain criteria for that. So that is corporate social responsibility. The Swachh Bharat Kosh has been set up to make sure that to the objective of Clean India, we can amass all these funds from individuals, from corporate sectors, from philanthropists. Okay, that this is the key point. UPSC can trick you with this. They can say that CSR can be availed only from corporate sector, only from industries, only from private companies. Okay, no. As for the Swachh Bharat Kosh, you can avail the CSR funds via individuals as well. Even individual contributions are accepted. Okay, administered by Governing Council chaired by Secretary Department of Expenditure, not Finance, Department of Expenditure. Donations to Swachh Bharat Kosh other than the sums spent on CSR is eligible for 100% deduction under 80G of Income Tax Act. So every year you go to the bank and you fill up a form, right? 16A. You will fill the form and give it to the banker in order to get the TDS, tax deduction at source. So 100% deduction in tax can be availed to any sum of money that you contribute to this particular fund, as long as it does not comes in your CSR. Okay, if it's outside your CSR, any amount that you put or contribute into this account will be 100% eligible for tax deduction. Okay, that's it. That is about Swachh Bharat Kosh. Okay, now we have 4 down. Fifth one, sovereign gold bond scheme. So gold is very, very, very valuable metal now. Anybody who has invested in these schemes should be great. I mean, should be super rich by the time, right? About around 40,000 plus for a 8 gram, huge rates now. So what is sovereign gold bond scheme? Investing in, look at this tagline: invest wisely, earn safely. This is precisely what is happening. Okay, invest wisely, earn safely. So let's look at these points one by one. First one, reducing the demand for physical gold by shifting a part of investment into gold bonds. Okay, we are trying to reduce the demand for physical gold. Physical gold is used for what? Weddings, and people are using it for amassing wealth, for all these things. Okay, I mean, gold is a very very reliable thing to invest in. So people are trying to get more and more physical gold. This can actually be dangerous. Why? Because that much physical gold, it has to be imported to India. So if that much physical gold has to be imported to India, then that means that much currency or that much money is going out of India, right? If India has to buy that much physical gold, then India should give that much money to somebody else who owns it, right? So that much money is going out of India. This is actually dangerous for India's economy. That is why government came up with sovereign gold bond scheme. So reducing the demand for physical gold, this is the primary aim, by shifting a part of it into investments in gold schemes. Okay, sovereign gold bond will be issued on payment of rupees and denominated in grams of gold. Okay, so the bond, I mean, bonds can be availed in any currency. It can be underwritten in dollar, or say some other yuan or yen, or pound, anything. But sovereign gold bond scheme is written only in rupees. It is not written in any other currency. Okay. Also, it has to be in multiples of grams. So you can start from say 10 gram. Assume it can be 10 gram, or it can be 11 gram, 12 gram. This is how you invest. You cannot invest 10.1 gram. This cannot be done. So it has to be in multiples of 1 gram. Okay. Bonds will be issued on behalf of the government by Reserve Bank of India. So Reserve Bank of India is the issuer. But the good thing is, it is on behalf of Government of India, which means it is a gilt-edged bond, which means it has guarantee of sovereignty. Okay, there is sovereign guarantee. The Government of India is the guarantee for this bond, so it is highly safe. All right. Unlike some other private bonds which can crash any day, this is guaranteed by the Government of India. Deposit will not be hedged, and all the risk associated with the gold price and currency will be borne by Government of India through Gold Reserve Fund. And in order for the government to ensure that such and such guarantees can be given, they are setting up a Gold Reserve Fund. This one will be used for guaranteeing all these things as far as sovereign gold bond scheme is concerned. Bonds are sold through scheduled commercial banks. Okay, now how do you buy this? That is what I am saying. You can buy this from a scheduled commercial bank, except, very very important, except RRB, regional rural bank, small finance banks, payment banks. Payment banks means post office banks, those kind of things. Your Paytm, these are payment banks. So you cannot buy this bond from RRBs, small financial banks, and payment banks. You can go to anywhere else, any other kind of bank, and avail a sovereign gold bond scheme. You can also buy it from Stockholding Corporation of India Limited, SEBI. Okay, and SEBI authorized trading members, designated post offices, and stock exchanges. Okay, not all post office. Remember the difference here. Post office payment banks cannot issue the gold bond, but post offices can. Not all post offices. Designated post offices. These two are different. Post office payment bank is different. Post office is different. Okay, and will be available in both demat and paper form, online, which means it is possible to get the online demat account or through your hard copy. If you are into stock exchanges, if you are already investing in stock markets, you can know all this. Okay, just in your stockbroker will list all the schemes available in gold, and you can invest in them. Okay, in your SEBI secondary trading companies. The bond will be restricted to sale to resident Indian entities with investment limit of 4 kg for individuals and Hindu undivided families, 20 kg for trusts and similar entities. This is again important. This is for resident Indian entities, which means that that entity has to reside in India. So no, not available for non-residents. Okay, only for resident Indian entities. Also, what is the limit? What is the cap? Per year, the maximum investment can be 4 kilogram for individuals and Hindu undivided family. Hindu undivided family is actually legal term used for certain revenue related matters. So just remember, HUF and individuals, these category can invest a maximum of 4 kilogram of gold in this bond per year. Okay, and for trusts and other similar kind of things, 20 kilogram is the limit. Okay, there are different limits, remember. Now, rate of interest which will be calculated on the value of gold at the time of investment. So this is not a guaranteed interest. Government will not say 10 percentage till the end of this scheme. No, it is not like that. It is the rate of interest is based on the value of gold. Value of gold is very volatile these days, right? It changes in huge margins these days. Per gram rate itself has high fluctuations. So a guaranteed rate is not given, but the government is saying that it will be based on the value of gold at the time of investment. So if you invest in this scheme when the gold price is pretty high, then you will get a high interest rate. Okay, so now it is a really great time to invest in these things. So do look into it. The tenor of this bond could be for a minimum of 5 to 7 years. This is the lock-in period. Okay, bonds to be easily sold and traded on exchanges, allowing early exit. So problem with this scheme is once you have entered, which means once you have bought this bond, there is a lock-in period of like 5 to 7 years. You have to continue this scheme for a minimum of 5 to 7 years. But what if you want to exit in between? What will you do? You cannot actually stop this, or you cannot actually cancel this. The way to do that is to sell this bond in your secondary market. Go to the stock exchange, or in your platform, the brokerage platform. There you can actually sell this bond in the secondary market. Secondary market means like NSE, BSE, okay, Bombay Stock Exchange, National Stock Exchange, all these things. Bonds can be used as collateral for loans. This is highly relevant point because there are certain kinds of certificates that cannot be used as collateral, but this can be used as collateral. What is collateral? As a guarantee, you are going to bank to get a housing loan. You are putting your, the papers, all the papers regarding your house, all the records you are giving to bank in order to avail that loan, right? This is the collateral. The documents regarding that property is given to the bank as a collateral for the bank giving the money to build the house. Similarly, these bonds are also eligible to become a collateral. Okay. On maturity, the redemption will be in rupee amount only, which would not be a fixed sum but linked to the price of the gold. Again, there is no fixed guarantee. Okay, it will be based on the price of the gold. So if the price of the gold is high, you will get a great return. If the price of the gold is low, you will get accordingly only. Okay, also it can be redeemed only in rupees. It cannot be redeemed in dollar or pound or anything else, only rupee. So that is all about sovereign gold bond scheme. Remember, it is to reduce the demand of physical gold. One, okay, it is only payment, the payment can only be in rupees and is denominated in grams. Then issued by RBI. Remember about gold reserve fund, where you can buy it. Okay, all scheduled commercial banks except RRBs, small finance banks and payment banks. Then remember about the limits. Then you have to remember about the interest rates. Okay, then the lock-in period, collateral, and finally how you redeem it. These are the main points regarding sovereign gold bond scheme. Okay, Pradhan Mantri Vaya Vandana Yojana. Pradhan Mantri Vaya Vandana Yojana. So what is this? Pradhan Mantri Vaya Vandana Yojana means the name itself says it has something to do with elderly people. Let's look at the points one by one. This is again by Ministry of Finance. I won't be saying that, or I won't be repeating that every time. Social security during old age and protect the elderly persons, which means 60 years and above, against future fall of interest income due to uncertain market conditions. So this is a social security scheme. Okay, it is for the security of 60 years and elder. Okay, so elderly people of 60 years and above, and this is to protect them from the future fall of interest rates. So they may have, invested their money in many different ways, right? Say mutual funds, or say FDs and all these things. Problem is if the economy goes down, then all the interest rates will also go down in everything, mutual funds, FDs, and all those things. Even now, the interest rates are very down, right? So this fall of income may adversely affect the older generation people. Okay, because they may not have other sources of income. This would be the interest income would be their only go-to area. Okay, so in order to protect them from all these fluctuations, Pradhan Mantri Vaya Vandana Yojana has been created. Assured pension based on guaranteed rate of return of 8% for 10 years. This is the rate. Guaranteed returns, okay, of 8% for 10 years, with an option to opt out for the pension of monthly, quarterly, half yearly, or annual basis. They can get the accrue the interest, or they can withdraw the interest on a monthly basis, on a quarterly basis, half yearly basis, or annual basis. That's up to them. Remember the rate 8% for 10 years. Investment limit is 15 lakhs. So the person has to invest a lump sum amount initially. So when the 60 years is usually the age when a person retires, right? So they will have some money from their PF or their other pension fund schemes. So they can put a maximum of 15 lakh rupees into Pradhan Mantri Vaya Vandana Yojana, which will earn them 8% guaranteed interest for next 10 years. Okay, that is the idea. Maximum of 15 lakhs. Implemented through LIC. So LIC is the implementation agency. Okay, so LIC may not be able to generate this kind of interest. Okay, 8% is pretty huge. Banks give like 7% and less than that. Okay, so LIC may not be able to generate 8% profit every time. So whatever is the gap will be funded by government. Okay, that is how it works. Premature exit only for treatment of critical terminal illness of the self or spouse. So once you got in, then you can exit only if there is a need for treatment of critical terminal illness for you or for your wife, spouse. Okay. On death of the pensioner during the policy term of 10 years, the purchase price shall be refunded to beneficiary. So if the person dies, that is a real possibility. Then the purchase price, what is the purchase price? The initial price. Okay, that will be given back to the beneficiary, whoever it is, nominee or whoever the eligible person is. Loan facilities availed after completion of 3 policy years. Okay, so based on this, they can avail loan as well, but that can be availed only after 3 years time, and the maximum amount that can be availed is 75% of purchase price. So if a person has put in 10 lakh rupees into this fund, then after 3 years the person is eligible to take 7.5 lakh rupees loan. Okay, 75% of their purchase price can be availed as loan after 3 years since the beginning of this policy. No tax benefits are available. So all income tax, TDS and all will be taken from this. So no tax benefits. This is another crucial point. Don't forget, no tax benefits. Okay, that is all about Pradhan Mantri Vaya Vandana Yojana. Now we are looking at ATAL Pension Yojana. ATAL Pension Yojana. Look at the background as well, and it is something to do with NSDL and all. Okay, this is from where you get your PAN cards, right? If you haven't taken a PAN card, you can go to this website and request for one. Okay. ATAL Pension Yojana. Fixed minimum pension at the age of 60 years, focused on an unorganized sector and replaces the Swavalamban scheme. There was an existing scheme named Swavalamban. Okay, ATAL Pension Yojana actually replaces it, and this guarantees you a minimum pension, fixed minimum pension at the age of 60 years. Okay, and this is focusing on unorganized sector. So people who are in the organized sector, they will have some kind of other social security benefits, right? They may have enrolled for NPS or EPFO, or they may have this government pension available to them. But the unorganized sector, these people do not have that kind of social security protection after in the long term, right? So ATAL Pension Yojana covers that part. Open to all Indians between 80 and 40 having a savings bank account. So again, look at the age gap here between 18 and 40 years. If you are between this age group, then do subscribe for this. I mean, if you are eligible, you can subscribe for this. Okay, that's really great. Central government co-contribute 50% of the total contribution or rupees 1000, whichever is minimum, for a period of 5 years, who joined the NPS between this particular period, and who are not members of any statutory social security scheme and does not come under income tax. Okay, so 50% of the contribution amount, this is a contributory pensions kind of thing. Okay, so 50% of the contribution amount will be given or will be contributed by the central government for the first 5 years. So if you are starting the scheme in the age of 20, then until you are 25 years, government will contribute the 50% of the net contribution. Also, be very careful. This is only applicable if you are not a member of any other social security scheme and if you do not come under income tax. Okay, there is a slab for income tax, right? Some 6 lakh rupees or something like that. So unless you are below that, you won't get this co-contribution by central government. Okay, fixed minimum pension of 1000 to 5000 per month at the age of 60. So fixed minimum, this is between 1000 and 5000. That depends on how much you contribute. Okay, if at the very early you join at the age of 18 and you start putting in a pretty good amount, then you can get the maximum benefit, 5000 rupees itself you can get. But if you are joining at the age of 35 and you are putting a very minimum amount every year, then the chances of the fixed pension will be a smaller amount. Okay, so it will be in the bracket of 1000 and 5000, and it will be available to you starting from the age of 60. Voluntary exit before the age of 60 from APY is subject to conditions. So understand that it is possible. Voluntary exit is possible. In case of premature death, what happens? So if premature death means death before the age of 60. Okay, what happens? The spouse of the subscriber can continue the APY or the subscriber for the remaining vesting period. So if the person die at the age of 58, his or her spouse can continue the scheme for the remaining time, which is plus 2 years. Okay, that remaining time the spouse can contribute and complete the scheme and avail the benefits. Okay, in case of death of the subscriber, the spouse of the subscriber will be entitled for the same amount pensions till his or her death. Okay, so if that subscriber dies, his spouse will be eligible for getting the benefits till his or her death. Okay, first point, this point was about contribution, and this point is about benefits. Okay, don't confuse. After the death of both subscriber and spouse, the nominee of the subscriber shall be entitled to receive the pension wealth as accumulated till the age of 60 years of the subscriber. So what happens if both the spouses die? Subscriber dies, his or her spouse also dies. Then what will happen? There are certain schemes where the remaining amount will be taken away by the government, but this is not like that. Here, the amount that has been accumulated till the age of 60 will be given to the nominee. Okay, not the additional benefits or anything, but whatever has been accrued until the age of 60 will be given to the nominee. Last point, it is administered by Pension Fund Regulatory and Development Authority, PFRDA. This is something that you see every day in your Hindu newspaper economics page, business page, PFRDA. Okay, so Atal Pension Yojana is regulated by Pension Fund Regulatory and Development Authority. Understood? So that is all about your Atal Pension Yojana, and we are going to move into Pradhan Mantri Mudra Yojana, PMMY. Pradhan Mantri Mudra Yojana. You can remember, if you remember this, you will get an idea what this is all about. Okay, so what is this? To refinance collateral free loans, okay, collateral free loans given by the lenders to small borrowers. So this is a collateral free loan, which means you can avail a particular amount of loan without giving anything as guarantee. Okay, has a corpus of 20,000 crores and can lend between 50,000 and 10 lakh to small entrepreneurs. This is the Mudra scheme. This is for development of small entrepreneurs, and the loan can be availed in between 50,000 rupees and 10 lakh rupees. This is the range between which you can avail this Mudra loan. Why is this in the news recently? This is in the news recently because the NPAs, the non-performing assets in this sector has increased very highly. Okay, so people who are into small businesses take this Mudra loan and defaults its payment. Okay, and this has started to create headache for RBI because the NPAs, the non-performing assets in this particular sector has jumped up very high. Okay, that is the reason why this is in the news. Banks and microfinance institutions can draw refinance under Mudra scheme after becoming a lending institution of Mudra. So this is where you get this scheme, banks and microfinance institutions. Mudra loans are available for non-agricultural activities. Important. Up to 10 lakhs and activities allied to agriculture are also covered. Very important. Only for non-agricultural and allied agricultural areas this loan can be given. So this is not given to farmers or agricultural purposes. There are other schemes for agriculture, but Pradhan Mantri Mudra Yojana cannot be availed for agricultural loan. Allied activities is fine. No, and non-agricultural activities is also fine. Okay. Mudra card, which permits access to working capital through ATMs and card machines. So this will be given. If you take a post office payment bank account, you will get a RuPay card, right? RuPay card is given to you. If you take one from your bank, then you will get a Visa card or a MasterCard, something like that, right? And if you take a loan by Mudra Yojana, you will be given a Mudra card. Okay, the loan amount will be transferred to your SB account, and you can either withdraw by going to the bank, or you will be given this card, this ATM card, from using which you can collect the money. Okay, there are three types of loans available here. One is the Shishu. I don't know if you can see this. I mean, I will try to zoom in a bit. Let me 1 second, guys. Let me just try to zoom this one in. Okay, if I zoom in, I cannot use my stylus. That is why I did not zoom in so far. But can I use my stylus? No. Okay. So I will zoom out after this. Shishu means up to 50,000. The loan is up to 50,000. Kishore, which means 50,000 and 5 lakhs. And Tarun is 5 lakhs and 10 lakhs. So these are the three types of loans available by PMMY. Shishu, Kishore and Tarun. Okay, and don't forget the limits. Microfinance institutions monitoring and regulation. So what are the advantages of using this scheme? One is microfinance institution monitoring and regulation. Big commercial banks can easily be monitored by RBIs, but microfinance institutions are hard to manage or hard to regulate. But this can also be done once they are brought under the Mudra scheme. Promote financial inclusion. Right? I mean, people who do not have enough money to start a small business can actually avail this scheme and get the money. So financial inclusion is entertained. Reduce jobless economic growth. This is one of the biggest headaches in India. Jobless economic growth. Indian growth, I mean, before this COVID, okay, just forget about the GST and COVID thing. But before that, India's growth was 7% and 7% and above, 7.5% or something like that. Okay, but even then, the number of unemployed people in India were very huge. This is something very unique about Indian economy. Indian economy is growing at such great paces, probably the fastest growing economy in the world, fastest growing large economy in the world, but people are unemployed. Okay, this is a paradox, right? But this can also be prevented if you can give these Mudra loans. How? These loans will enable people to set up their own small businesses, and they will, they won't be jobless anymore, and at some point they can actually provide jobs for other people. Okay, so the jobless economic growth can be inhibited. Integration of informal economy into formal economy. So once this loan is given and people in the informal sector take this loan and start a business, they will also come under the organized sector. They will also, so which means we can get a better picture of the Indian economy. Okay, so that is all about Pradhan Mantri Mudra Yojana. Clear? National Pension Scheme. What is National Pension Scheme? NPS. You can avail this, okay? Go to this NPS website and you can avail this. It is a really great scheme. So I will tell you what this is. Government sponsored pension scheme, okay, launched in January 2004, not important, for government employees and later open to all the sessions. Initially this was available to only central government employees, okay, back in 2004, but later on in 2009 onwards this has been open to everybody. Subscribers to contribute regularly in a pension account during their working life. On retirement, the subscribers can withdraw a part of the corpus in a lump sum and use the remaining corpus to buy annuity to secure a regular income after in retirement. So this is how it works. It's a contributory pension scheme. Government will contribute some amount, we will contribute some amount. So if I am working, then I will contribute a fixed amount every month from my salary into this national pension scheme. Government will also contribute some amount, okay, and at the time of my retirement I can withdraw a lump sum together, a certain percentage, not the whole thing, okay, a lump sum can be withdrawn. The remaining money can be used for, you know, to get avail regular interest. Okay, that is the idea behind NPS. It is a contributory pension scheme managed by PFRDA, Pension Fund Regulatory and Development Authority. Citizen of India between 18 and 65 years of age can join in NPS. Between 18 and 65 years. Even if you do not have a job, you can join NPS. You have to definitely contribute at least rupees 1000 per every year. Okay, put rupees 1000 every year into NPS. You can start now itself, and once you get a job, you can increase the amount. I mean, obviously the company will increase the amount, and this will go on. Okay, and if you resign the job and you are looking for another job, in the meantime also just contribute 1000 rupees every year. That is enough. That is a minimum contribution. NRI can join NPS. Okay, there are some regulations regarding the FEMA Act and all, but even then NRIs, non-residential Indians, are allowed to join NPS. Recently, RBI allowed the overseas citizens of India to also can join NPS Tier 1. There are many schemes, Tier 1, Tier 2, Tier 3. Okay, Tier 1, NPS Tier 1 can be availed for overseas citizens of India as well. You have to study. In your Lakshmikant Polity textbook, there is a clear thing showing what is overseas citizen of India. Learn that. There are many points. I cannot explain everything right now, but read that. NPS Tier 2 is not available for NRIs and OCIs. Okay, only Tier 1 is available. That is all about National Pension Scheme. National E-Assessment Scheme. Now we are looking at some small schemes. Okay, we will finish this up very quickly. Again, Ministry of Finance. National E-Assessment Scheme is an independent office that will look after the work of E-Assessment Scheme, which is recently notified for faceless E-Assessment of income tax payers. This is the biggest advantage here. Faceless assessment of income tax for taxpayers. Okay, that is National E-Assessment Scheme. Just remember it. Headed by Principal Chief Commissioner of Income Tax. Okay, so the headquarters is located at New Delhi and it is headed by Principal Chief Commissioner of Income Tax. But there are 8 regional offices for this, located at Delhi, Mumbai, Chennai, Kolkata, Ahmedabad, Pune, Bangalore and Hyderabad. 8 regional offices, and it comprises of various committees and units like assessment unit, review unit, technical unit, verification unit. Not important, just understand that it has 8 regional offices. Each regional office will be headed by a Chief Commissioner of Income Tax. Principal Chief Commissioner is the overall head. Regional heads are Chief Commissioners. Cases for specified work shall be assigned by NEAC to different units by way of automated allocation system. So there is no face timing. Okay, all these are e-assessment, faceless e-assessment process. Okay, so automated systems are there in order to do all these specified works. That is all you need to know about National E-Assessment Scheme. This is regarding assessing your income tax without physically being present there. Okay, faceless e-assessment. Public Finance Management System, PFMS. Okay, you can look at the picture here. This is the official account, PFMS. What is that? End-to-end solution for processing payments, tracking, monitoring, accounting, reconciliation and reporting. We will look into what it is. Okay, administered by Department of Expenditure and implemented by the Controller General of account. Okay, so this one, public finance management system, is a system that is designed to provide an end-to-end solution, to provide a comprehensive holistic solution for processing payments, for tracking and monitoring accounting things, and also reporting regarding public finance. Okay, and this is administered by Department of Expenditure. Also, it is implemented by Controller General of Accounts. Okay, CGA. It provides scheme managers a unified platform for tracking, releases, and monitoring their last mile utilization. So, who are these scheme managers? For example, in a mutual fund scenario, each mutual fund investments is actually looked into by a scheme manager. There is a mutual fund scheme manager who is the brain of that particular fund. He's called a fund manager. Similarly, as far as public finance is concerned, there are many schemes that goes on, and these scheme managers can utilize this tracking, monitoring, accounting, everything, okay, and use it to take informed decisions, informed verticals. Okay, it provides platform for efficient management of funds through tracking of funds, real-time reporting of expenditure through treasury and bank interface. This is what I just said. Real-time tracking, management, monitoring, all these are possible, which will enable a comprehensive system that can be utilized for taking informed, wise choices. Ministries and departments utilize this platform to monitor utilization of funds provided to the implementing agencies and state governments. This is another good thing. Central government always gives money as grants or as as a part of their centrally sponsored schemes to state governments and different departments, right? And have the states and departments use this money in the way they are supposed to use it. All this can be monitored and tracked using this system. Okay, so this is bringing more and more accountability or more and more transparency into the public finance system. PFMS is also used for DBT payments under MG Narega and other notified schemes of government. Again, this is public finance management. So Mahatma Gandhi National Rural Employment Guarantee Assurance Yojana, the Mahatma Gandhi Narega scheme. This and often the payments are made to the scheme workers through direct benefit transfer through the Jan Dhan accounts, right? So this also can be monitored and tracked using PFMS. Okay, so it is a system that brings in transparency into the public finance system in India. Okay, Aam Aadmi Bima Yojana. What is Aam Aadmi Bima Yojana? Okay, let's look at it. It is a social security scheme administered through LIC. Okay, social security scheme administered through LIC. Death and disability cover to persons between the age group of 18 to 59. So it is not 60, it is 59. So not for senior citizens. Okay, death and disability cover. It is group insurance scheme providing insurance cover for sum of 30,000 on natural death. So even natural death is covered under this scheme. If you die a natural death, you can have a cover of 30,000 rupees. 75,000 on death or total permanent disability due to accident. Okay, death due to accident or total permanent disability due to accident can avail up to a coverage of 75,000 rupees. 37,500, 50% of that. Okay, for partial permanent disability due to accident. Partial permanent disability, I already explained to you what these are in the beginning of this class. Okay, so permanent full disability or death due to accident is availed 75,000 coverage, and 50%, that is 37,500 will be given for partial permanent disability due to accident. Total annual premium is rupees 200 per beneficiary, of which 50% is contributed from Social Security Fund created by central government and maintained by LIC. 200 rupees, that is all you have to pay per year. And even in that 200 rupees, 100 rupees you have to put. The other 100, 50% will be given by central government via this fund set up for this purpose together by central government and LIC. Okay, so this is also again a contributory insurance scheme. Okay, the balance is contributed by state government, nodal agencies and individuals. So this fund, although maintained by central government and state government, this amount is actually contributed by state government or nodal agency or individuals. Okay, so 50% by central government and LIC, the fund created by these two. The remaining 50% by either the state government or by the individual himself. Okay, that is what I said. 100 rupees you can give, or state government can give. It's different on different states. Okay, and or the nodal agency, whatever it is. This is how it is. So together you will have 200 rupees. Clear? 13. Varishta Pension Bima Yojana. Varishta Pension Bima Yojana. What is this? Varishta. So this is again for citizens aged 60 years and above. 60 plus. 60, greater than or equal to 60. Okay. Subscribers on payment of a lump sum amount get pension at a guaranteed rate of 9% per annum payable monthly. So the person has to contribute a lump sum amount. So lump sum amount means a huge amount at once. Okay, your normal LIC or insurance schemes are, you have to give premiums, right? Per month you have to donate say 500 rupees or 1000 rupees. This is premium. Lump sum means it is not monthly or anything. It is one time payment of a bigger amount, say 1 lakh rupees, that just one time. Okay, so it will accrue 9% interest per annum, which is payable monthly. Okay, administered through LIC. Okay, LIC is again the administrative agency. Any gap in the guaranteed return is covered by central government in way of subsidy. Okay, again I told you before, LIC may not be able to generate this kind of profit. Okay, so whatever is the gap between LIC's generated profit and the actually guaranteed interest will be given by the central government as subsidy. Allows withdrawals of the deposits amount of the attunant after 15 years of purchase of the policy. So the deposited amount, if he has contributed say 5 lakh rupees into this Varishta Pension Bima Yojana, it can only be withdrawn after 15 years of purchase of policy. So it is locked in for until 75. If you join at 60, you can withdraw at 75. Okay, that is Varishta Pension Bima Yojana. Again, remember it is for senior citizens 60 and above. Assured returns of 9% per annum payable monthly via LIC. The gap is provided by central government and deposit can be withdrawn by the attunant after 15 years of purchase. Gold monetization scheme. Okay, one more after this and we are done. Gold monetization scheme. So what is this? This is again by Ministry of Finance. Reduce the country's reliance on import of gold to meet domestic demand. Again, we have to reduce the import of gold. I told you why when I explained the sovereign gold bond scheme. Okay, mobilizing the large amount of gold lying as an idle asset in the household. This is the second advantage here. Why? Because people buy gold, put it in their house. No, it is actually dead wealth, right? I mean, gold ornaments. I mean, you use it sometimes, but other than that, that kind of wealth is in your house, in your locker, in a box, good for nothing basically. Okay, I mean people consider it as a very safe thing, but as far as the nation is concerned, economically that is a dead wealth. So government is trying to get those into the economy, get those back into the economy using gold monetization scheme. So monetizing the gold. Okay, that is how you remember it. Gold savings accounts which will earn interest for gold that you deposit in it. So the people can deposit gold into this scheme and they will get a particular amount of money as interest. Deposited gold can be of any form, jewelry, coins, bars. Okay, you can deposit your chain or your anklet or your bangle or even the gold biscuit or your gold coin. Anything is acceptable as far as gold monetization scheme is concerned. Tenure is a minimum of 1 year. So if you are starting it, you cannot take it out immediately, but it can be taken out only after 1 year. So minimum tenure of 1 year. That is gold monetization scheme. Just understand the objective of this scheme. Okay, reduce the import of gold into the country and mobilize the large amount of gold lying idle in the households. These are the two key objectives of gold monetization scheme. Last one, Project Saksham. Project Saksham. There are many Saksham projects. Okay, One is related to GST, and that is what I am going to explain. There is another Saksham project related to railways. Okay, do learn about that as well. Railways Saksham project. But today we are going to look at the Saksham project related to GST. Creation of a new indirect tax network of Central Board of Excise and Customs. So CBEC, or the Central Board of Excise and Customs, is creating a new indirect tax network. This was created as a part of releasing or rolling out the GST during those times. Okay, implementation of GST. I told you, Project Saksham has been rolled out as an indirect tax network and laying a perfect ground for rolling out the goods and services tax, GST. Extension of Indian customs single window interface for facilitating trade. Okay, this is another objective. Swift stands for single window interface for facilitating trade. So this is by Indian customs. So you know that whenever you import or export something, there is some customs clearance in the way, right? And that is a huge mess actually. There is no single window process, so after one section you have to go to another section, and another section is a headache, and that always hinders trade. Okay, so in order to clear all that, this provides a single window interface for clearing all your trade facilitating your trade regarding the Indian customs. Other taxpayer friendly initiatives under Digital India and ease of doing business of Central Board and Excise Customs. Okay, this is also part of Digital India. Digital India is Narendra Modi government's flagship program. Okay, regarding digitalizing everything, every sector, and Project Saksham is regarding the trade and customs. Ensure readiness of CBEC's IT systems. Again, I told you this is regarding Digital India. So information technology systems are all to be upgraded and be ready for using. So that is all about Project Saksham. Just remember, it is regarding, there are two Project Sakshams. One is regarding railways, other regarding GST. So we are looking into the finance sector. So we are looking into the GST Saksham, and that deals with creating an indirect tax network and a single window clearance for facilitating trade. Okay, these are the objectives of Saksham project. Okay, no other high-five points are there. It is for facilitating trade and providing a single window clearance in the customs sector. Okay, that's it. We have completed the 15 government schemes for the day, and we will be looking into another 15 tomorrow from a different ministry. But thank you for joining me, and this is my code to avail 10% discount. Please share this with your friends. Alright, MSRW1. You can get the PDFs and class updates in this particular link as well. In the Telegram, go search Unacademy_Madhav. Okay, so please do like, share, and subscribe, and join me at the 4 p.m. MCQ current affairs session. Okay, 25 questions, and at the 6 p.m. MCQ in Unacademy app. 4 p.m. session is in YouTube only. Okay, so until then, see you guys. Thank you to everybody who joined. This is bye.